Crypto options trading can be daunting, but what if the complexity could be automated and transformed into passive yield? That's where crypto vaults actually come in, because these DeFi native strategies are revolutionizing how both retail and institutional investors extract returns from volatility. In today's video, we break down how they work, where to find the vaults, what risks you should be aware of. And if you like the kind of content on the channel, make sure you hit the like and subscribe and check out the links down below. Let's start with what crypto options vaults actually are. So these are automated smart contracts that execute recurring options strategies, typically selling covered calls and cash secured puts. And the goal really being to generate stable yield from market volatility without this active management, right? So platforms popularizing these kind of methods include platforms like Polynomial, which is on optimism. You have weekly call selling strategies with that. You've got Ribbon Finance on Ethereum, which offers structured products with BTC and ETH exposure. You've got Friction on Solana, an institutional style option strategies a platform with transparent risk modeling, so sunsetted but also foundational. So you can think of these as robo advisors for crypto options. Another one of my favorite platforms, GRVT, the Gravity, is going to be introducing their vaults very soon, so make sure you stay tuned for that. If you want to get started with Gravity, in the meantime, check out the link down below. Also check out the comparisons that we've done between Gravity and Hyperliquid, for example. It's a great trading platform and something you should definitely be looking out for. So let's talk about weekly rolling strategies. Let's explain those. So the most common strategy is this weekly covered call. So you can deposit ETH into a vault. The vault sells out of the money. Okay, so that's empty OTM call options, and you can earn premiums each week. If ETH price stays below the strike, you are able to keep the yield. If the price goes above that, your ETH is sold at the strike price. So some vaults also run put selling strategies to accumulate assets cheaply, right? So you also have things like vault returns, okay, versus LP farming, right? Like, for example, yield farming in DeFi often kind of depends on liquidity, mining incentives. Options vaults generate a real sustainable yield from market pricing and volatility, not inflationary token emissions, right? So you've got options vault where you get real yield from options premiums. You've got LP farming where yield often is from inflationary rewards, and then spot staking, yield from network inflation or just the transaction fees. And then you also have passive vaults, right, versus DIY options, for example. So vaults, e.g. Polynomial or Ribbon, they're kind of easy to use, okay, no need for options experience. They're less flexible though, and subject to vault capacity limits as well. And, you know, DIY options where, you know, you can go to Derive, for example, which was previously Lyra, or Dopex. You know, these are full strategy controls, more instrumental calls, pulse, spreads also, but they do require deep knowledge and also high complexity and gas fees, right? So some of the risks to definitely know is obviously implied volatility, right? Crash, where volatility drops and premiums shrink. Market neutrality, right? Strategies may underperform in those trending markets. And also vault capacity, which is popular vaults often cap deposits as well, and slippage and settlement. With some options settling off chain, this also just increases risks if it's not fully on chain, right? So you've got also platform APY comparison, the Polynomial, ETH covered calls, established yield. I think last I checked was 0.5 to 1.5% on chain on Optimism, right? Ribbon BTC ETH options, 0.3 to 1% on Ethereum. DPX Dopex, right? That's SSOVs, the vaults there, variable on Arbitrum. And then you've got Derive, which is these automated market maker options, active strategies on Optimism as well. So if you look at like kind of these things, you can kind of come to the conclusion of whether you want to be using vaults or not. If you want passive exposure to derivatives without actually managing derivatives positions, options vaults one of those most compelling innovations in DeFi right now. So they're not risk-free, of course. They do offer you a class of structured yield farming based on market pricing in inefficiencies rather than token inflation. But like I said, they are not risk-free. So there is some risks, and you ought to know that. And that's why I always say this is not financial advice. But if you want to start with options there, maybe you can look at Polynomial, Ribbon, Dopex, Derive. I'll put some of the links in the description. You can also build your own vaults, right, on Gains Network, on G-Trade, for example, one of my favorite platforms to trade options and synthetics on. So these are some of the things that you can learn if you want to tap into what we have going on Decentralised.news. Go to our main site. Also go to DeFi-millionaire.com. Get my free book. The links are all in the description. Some of my favorite trading platforms are all in the description. And make sure you like, share, and subscribe. Check us out on all our different socials and get into our groups. And we can connect there, and like, share, and subscribe, turn on the notifications. I'll see you guys in the next videos. Peace.